Hey, this is Noy with Signature Residential Group. We have a special guest today. His name is John Sorrell with MVB Mortgages. And today we're going to talk about a little bit more like on the construction loan. So John, how was your drive here?
Wonderful. It was easy, no traffic.
You serve the Fayetteville area as well as Jacksonville. And me and a couple of people in the team, we also do the Fayetteville area as well. So today we're going to talk about what is a construction loan.
Well, construction loan is when the borrower goes out and looks at land and finds a piece of property that they want. With their agent, they would go ahead and write a lot contract for that. At the same time, the agent and or the lender could hook them up with a builder, and they would go ahead and look at floor plans and get the specs and plans together and write a contract on that piece. So what I simply do is I take the lot contract and the construction price from the builder and add them together. And that would give me the total cost of the project. At that time, we would go ahead and order the appraisal. So we know that this home is going to appraise, and we don't have any issues at the end of not having the appraised value that we're looking for.
Okay, that makes sense. Now, if you guys have any questions, please chime in. We're here to assist you. If we don't have the answer, we'll get back to you. Okay, so what other programs do you offer on construction?
Okay, so we have the VA loan for active duty servicemen or women, and also veterans.
Right.
Again, if we have a lot contract and the build contract, we will lend 100% of that, and the VA requires no down payment on that. So I have 100% VA construction loan, and then I have the FHA, where you have to put down 3.5%. That's required by FHA. On a conventional product, if it's your primary residence, we're looking for a 5% down. If you're going to have a second home in the conventional product, then it's going to be 10% down.
Okay. Now, how does the lot and builder work together? How do you work with the builder?
Well, what will happen is what I'm looking for in the lot contract is that we have enough time to close on that, but also get with the builder and they have enough time to get their specs and plans together. Because if I were to get a lot contract and we're going to close in 30 days, but yet the builder needs 2 or 3 weeks to get me the specs and plans, that's going to delay everything because I can't order the appraisal. And the appraiser, there's some documents that they always request, which is the specs and plans, and sometimes a survey or plot plan. And then there's some VA forms that need to be filled out and some HUD forms that need to be filled out. And they're called specification forms. And on those forms, it gets very detailed if it's vinyl siding and what's the PSI and the concrete and so forth and so on. So those are very detailed.
Right, and it sounds like communication is big, so you should hire a buyer's agent.
Absolutely, absolutely. It's so much easier, the transactions with an agent.
Now, what if I have a land already in place? How can I do a loan for that, for a construction loan?
Well, if you already own the land, then basically what we do is we'll take that land and use it as lot equity. Okay. So then at that point, I would only need the builder contract. So we would go to the appraiser and say, this is land that we own, and then this is what we think the land is worth, and then also this is what the construction cost is going to be, and have them both appraised together at that point in time.
Okay, that makes sense. So what kind of payments, now let's say I got the construction loan, what kind of payments do I make? Who do I make it to?
Well, you'll make them to MVB Bank.
Okay.
We are a bank, and then we're also MVB Mortgage.
Right.
So the construction loan will go through MVB Bank. Okay, you're required to make interest-only payments until the home's completed, which in our area is normally about 4 to 5 months at the most. So you would expect someone to maybe make about 4 or 5 interest-only payments. Okay, so I'm going to give you an example. Let's say you buy the lot for $20,000 and you're going to build for $200,000, so you have a total cost of the project $220,000. We'll pay the lot off at the construction closing, and your first interest-only payment would be about $89.
Okay.
When people hear interest-only payments, they think of this huge payment, and it's really not. It's an interest-only payment. So you would make that interest-only payment, $89, and then as the builder starts to pull money, draws. A draw is when we send an inspector out to evaluate what work's been done and how much the draw can be paid to the builder. So what happens is, let's say that the builder needs $20,000, and we go out and we do the inspection, and now we pay $20,000 to the builder. So you've used $40,000, okay? So what will happen 30 days later is your payment would now go up to about $189 on an interest-only payment. But I would like to go back to one thing, a question that you asked, I don't know if I answered. A lot of times I get a question or phone call that I've already taken out a lot loan, John, with
Okay.
the Farm Credit Bureau or with another bank. What do we do then? Do I have to wait until I pay that lot off? And the answer is no. I will go in and I'll get the payoff from that lender or that institution, and then I will pay them off at the construction closing. And then you'd make an interest-only payment based off whatever that amount was.
Okay.
So if you already have the land and it's financed, it's okay. We can pay it off. Okay?
Yeah, that sounds good. Now, can you tell me a little bit, because I like to make these videos informative for, I mean, I'm learning every day too about construction loan. A little bit more like a balloon loan. Can you
Okay.
elaborate a little bit about that?
Yes, ma'am. So what happens is the construction product is a conventional product, okay? And it is set up on a 12-month balloon. A balloon is there's a start date and a finish date, and that loan must be paid off or refinanced in that time frame. So for an example, on a construction loan, it is a 12-month balloon with an interest-only payment that we've discussed. So what will happen is, in most cases, we'll take out the construction loan, and with 5 or 6 months, we will use your VA, FHA, or conventional product and pay off the construction loan. So we don't ever get to that 12-month mark. If it's a custom home, sometimes these homes take longer than a year to build.
Right.
And in that case, what we'll do is we'll look at the project itself and how big it is, and as long as everybody has worked through, continuously, and everything's gone as planned, and we need another month or two, normally the bank will extend the balloon payment for a couple more months and not call the note due.
Okay, that makes a lot of sense. Now, I'm Noy Luna with Signature Residential Properties. So if you have a real estate question, I'll be able to assist you. Now, if you have a construction loan, John will be able to assist you. So I hope you guys found this video informative. And if you have any questions, feel free to always give us a call or a text or email. Enjoy the rest of your day.
Thank you.